All right. Hey, everyone, and welcome to the Plant Stock channel. Jesse here, and also with Mayur Thaker. And we're going to discuss Beyond Meat. And specifically today, we're going to focus on a little stock prediction. But before we get started, just a little disclosure here regarding Mayur and his statements. Since he works for Sachs Investments Research, we all have to understand that this is just his personal views and ideas, and it's nothing that should reflect his workplace. And the same thing here with me. As you guys know, if you've been a part of this channel, these are just my opinions. This is not financial advice. So guys, it's just two guys talking about stocks we are interested in, basically. So, so Mayur, if you want to, talk, for you, this is the third time you're here on the channel, but so there might be some people who are not that familiar with you yet.
Yeah, absolutely. And yeah, just as you mentioned, just wanted to quickly just mention that this is just for informational purposes only. Nothing is investment advice, so please do contact your financial advisor before making any decisions. But none of the securities that we talk about here today is going to be a recommendation to buy, sell, or hold.
Exactly.
So I am an analyst and relationship manager at Zacks Investment Research, and so we provide equity data and services to institutional portfolio managers and analysts.
Yeah.
So my background is in the investment world.
Right. And guys, for you who don't know, me and Mayur has talked about this, and we're gonna try to do this on a weekly basis and do a little shorter live stream, like everything between 10 to 20, maybe 30 minutes with some questions, depending on Mayur's time, of course. There's a bit of a time difference here too. I'm based in Sweden, so it's about 8:30 here, but I think in the East Coast in the US, it's about 2:30. And 3 hours before that in California, of course. But again, guys, if you want to connect with Mayur, we have his Twitter account here where he talks about the stocks that he's really into. And I think it would also be interesting to mention that yesterday you had an interesting interview, right, with Dave Lee on investing. And you guys talked about TDoc, right?
Yeah. We're just talking about Teladoc. That's another one of the companies that I personally own, and I'm just excited about their future.
Yeah. So awesome. And that was it was a Twitter live stream, right?
Yeah, it was Twitter Spaces.
Yeah. So if guys, if you're interested in TDoc, go in and check that out. So my understanding is that your largest stocks is in Tesla and TDoc, right? And Beyond Meat is around your fifth place in your portfolio?
So yes. Well, actually, I think my second largest at this point, because these stocks have come down so much, my second largest is now AbbVie.
Okay.
AbbVie is another big position of mine. It's a little bit of a different style versus like Tesla and Beyond Meat and Teladoc, where that's more of a very large, mature, and very profitable, pharmaceutical company. But it's a slightly different investment style, which I still think has, very good results long term. Because it's such a low multiple business with leadership positions in oncology and hematology and immunology. So they've got one of the world's best, drug portfolios with regards to that, and yet the shares are extraordinarily cheap on a price to earnings basis, and I think that that's going to change over the next 6 to 7 years, and I think that company is going to do quite well,
right?
Just like these growth companies.
Yeah. Awesome. So I thought before we start, maybe we could just do a quick review on what's been going on with Beyond this week. Last week, they've had actually two interesting news items, and one that is fairly big, I would say. The stock is now, after 5 days of trading, is down about 8% almost. And that's after having some kind of leaked news. I'm not sure if I was the one who leaked it, but it was someone else actually who talked about it a month ago, and I just referred to her video where she stated that we have the might see a Beyond Jerky coming out from the PepsiCo deal. And then obviously this is not official news, but we've heard it from Bloomberg mentioning two. It actually came out the day after my video was released, when they talked to this woman. I think her name is Amber Christie. Talked a little about her again today on my latest video, and then we had 600 locations, new locations in the U.S. when it comes to the Mac plant, right? So
Right.
yeah.
So yeah, I think it's moving in the right direction with regards to the relationship with both Pepsi and McDonald's, and so this is why, like, I think Beyond Meat has just a really strong pipeline for 2022. I think the reason why the stock is getting thrown out with everybody else is because when these types of macro events occur, and this is happening across the board, not just Beyond Meat, but just about every company, dozens and dozens of companies that were once darlings of the market are now getting trashed
Yeah.
by the market.
Yeah.
And it's, I think, for good reason, because a lot of these companies were absolutely trading at just stratospheric valuations. We've never seen a time when so many companies were trading at 30 to 50 times revenue.
Yeah.
Forget about earnings, but these are companies that are not even profitable, and they're being valued at 40, 50, in some crazy scenarios, 60 times revenue.
Yeah.
And that's just simply, it's never in the history of markets ever been sustainable. It doesn't matter how good of a company you are, or how, like, what the future prospects are. That type of forward-looking, optimism being priced in today just simply doesn't occur with a good result long term.
No. Exactly.
For investors, and I think Beyond Meat was like that. And I think we talked about this before, but like I've been a fan of Beyond Meat for 6 years, but ever since the IPO, I never touched the stock, because it was just, again, far, far above what I think it should be worth today.
Yeah.
Because remember, we know, you and I, like, have a view of the future, right? Where alternative meat, plant-based protein would take over a big chunk of market share from the meat industry.
Yeah.
But as an investor, we want to be able to find a disconnect between what we know and what the market thinks is going to happen.
Yeah.
If the market is already super optimistic and it's pricing in the next 5 years of growth into the stock today,
Yeah.
then the stock won't actually do well as an investor.
No. Exactly.
And so Beyond Meat had that. I think Oatly also had that. Oatly, I think, was even crazier than Beyond Meat in terms of its multiple to revenue. And that's why we saw it come down so much from $20 down to now, I think 6 and change.
It was actually up to $29 at one point, and it was valued at around $17 to $18, and now it's $6 and around $4 billion, I guess. Mm-hmm. So yeah, it's a huge difference what's happened now in the last couple months. So even though we had Spruce Point coming in there and talking basically smack about the company, and probably made up quite a lot of lies there to reach their point, to be able to short the stock, still it was extremely overvalued. Yeah, it's sitting now around $4.09 billion in valuation.
Yeah.
So that's a big difference.
Yeah. And I think these companies are getting close to where it should be. I think we're close, but I still think that there's more to go, just because remember, the multiple on revenue is one thing, but to compare different companies to a price to sales multiple, I don't think is very accurate, because companies have completely different cost structures. Right? You can't compare the revenue multiple of a software company with the revenue multiple of like Tesla.
Exactly.
Because gross margins are so radically different.
Yeah.
So the multiple to gross profit is a much more comparable number. And for Beyond Meat, that number is at 32 times. So if you take the last 4 quarters of gross profit and look at today's enterprise value, for Beyond Meat is roughly, as of my data right here, 4.1 billion.
Yeah.
So that's market cap plus the net debt on the balance sheet. So that's about 4.1 billion. And the trailing, 4 quarters of gross profit is about 128 million. So that gives you a 32 multiple. That's still pretty high. However, if you look at it relative to revenue growth, I think it's getting close to being attractive once again.
Yeah.
However, the market doesn't yet price in things that you and I are seeing, because most people are not focused that much on the specifics of what Beyond Meat is about to go through in 2022.
Right.
So I think there's a difference between what you and I think is the intrinsic value of the company and what the market is going to price into the stock today.
Yeah.
And with this macro challenge that everyone is going through uniformly, I think there is with Beyond Meat and Oatly.
Yeah, I think it's interesting from the Discord channel where you're at every now and then, also talking with us. It was funny that we have Arthur in the Discord channel. He just said, I think it was yesterday, that it's funny with Beyond Meat and a lot of these growth stocks that it used to be before that if you got kind of good news, the stock would start going up, right? And it'll be up for a while. But it's like you said, that's so 2021, basically a year ago. Because now, no matter what, like yesterday we found out 600 new locations, right? When it comes to Beyond Meat, and sure, it's not 14,000, which we are expecting to maybe this year, but 600 is still pretty good at McDonald's. Yet, and pre-market it was up 8%, and it still ended up at minus 3% basically.
Yeah.
So yeah, and I guess it has to do with, obviously, like you said, the macro uncertainty. We all know that the market hates uncertainty, and there's a lot of uncertainty. We're wondering how many rate hikes we could expect. They've been talking about 3 rate hikes, yet there are some people, some experts out there that are talking about that we could see 6 to 7 rate hikes this year. The interesting part about that, I actually saw that in a comment, someone who said it's the midterms, right? Now, and not sure if that would be a smart move on Biden's part to have actually 6 to 7 rate hikes. So obviously that's politics now, but that's also the reality we live in. So I don't know. What do you think about that?
Yeah, I don't know if they're gonna. I don't know if they're gonna hike that much. I think they're guiding for that, and then this is what the Fed does: is sometimes just talking about something can have the effect of the policy itself, because markets are always forward-looking.
Yeah.
So the Fed doesn't even need to hike rates; they just need to talk about hiking rates.
Yeah.
And the market, adjusts accordingly.
Yeah.
So they're talking about, a lot of, multiple rate hikes, but I don't think that that's going to actually happen. And the reason for that is because of what the yield curve is telling us. So the Treasury yield curve, which is the spread between the yield on the long-term bonds, like the 30 years, and the yield on the medium-term bonds, which is roughly 10 years.
Right.
And that spread has been narrowing dramatically, which means that short-term rates are not moving high relative to long-term rates.
Right.
So that typically happens when the bond market thinks that there is a growth slowdown coming.
Yeah.
If there's deflation coming, if there is a recession coming. Now, we've been here before and we didn't get a recession. So I'm not saying that we're necessarily going to get that, but that's what typically happens when you have, yield curve compression.
Yeah.
Is a concern that growth may not continue as rapidly as it once did.
Right.
And that's actually interesting because here in the States, we have very, very high inflation. CPI index is, at 8% now,
Oh,
which is the highest it's been in 30 years
yeah.
for us.
Yeah, it's even
Uh,
40 years, I think, since 1982, right? So,
yeah,
yeah.
exactly. I
Mm.
think, yeah, in fact, you might be right, because it did actually get even higher than the peak that we saw. So back when the Gulf War broke out, the first Gulf War, when way back when Saddam Hussein invaded Kuwait,
Yeah, back in
um,
91, I think.
91, yeah.
Hmm.
And that whole, like, chain of events caused inflation at that time. There was also a recession. And I think the CPI in the US got up to like 7 point, I think it was 8% or so. So yeah, now that we're at 8%, we officially took out that high from 1992
Yeah,
or 1991.
yeah.
Yeah, so this takes us all the way back to the 1980s, to see a higher number on the CPI.
And then,
But that's one thing. But then, the bond market is saying a different thing, because usually with inflation you would have a rising yield curve, meaning, the rate on the long bond would be increasing at a faster rate than the rate increases on the short term bonds.
right.
But the exact opposite is happening, is that yields are falling on the long end. And that only happens when the bond market thinks that there is going to be, a slowdown in the inflation rate,
Right.
and that can happen due to slowing growth, or even a recession.
Yeah. And then one
So I
of
think
the,
that's why all these growth stocks are getting hit so hard.
yeah,
Is not actually concerns about rate increases, because the yield curve is telling us a different thing. But that there is a concern about a slowdown in growth.
yeah,
You know.
exactly. But then I think also, besides the financials and the macroeconomics in that way, I would say what's going on now also, besides the pandemic, then we have what's going on in the Ukraine, that we're seeing more and more reports now. And even the White House basically going out and stating that if Russia basically invades Ukraine fully on now, there's no telling what the US would do. That their gloves might go. I heard in the Swedish news yesterday that when it comes to financial embargoes, the ones the U.S. have now against Russia is actually the most we've seen in many, many years. It's never been this harsh for such a long time. And so the question is, what would they do? Would they actually start to mobilize more when it comes to NATO? Even in Sweden, they're actually starting to mobilizing in the coasts a little, and on our islands closer to the Baltic Sea. So,
Hmm.
it is. You can feel, and me as a historian, I see a lot of similarities here, and there's talk about similarities. With how World War II started, when the Germans, the Nazis, actually started invading a couple of countries, and Western Europe and the U.S. were quite quiet anyhow, because they're like sitting just waiting for the chess pieces to move on. And then when they eventually moved into Poland, that was it. They had to do something, right? So,
Yeah.
so I'm not sure that I actually believe that we will see a new war of that scale. But obviously, these kind of scares, and media obviously is going to play on that. It's going to scare the whole market as well.
Yeah. Yeah. Exactly. And especially because we're starting from such a high base.
Mm.
You have a rally in the market that's been nonstop for 2 years, and companies across the board hitting multiples that we haven't seen in 15 plus years,
Yeah,
right? So it's a perfect storm of a Fed that is changing their position on monetary policy and starting to get a little bit more strict with tightening the balance sheet and increasing interest rates. Geopolitical risks are starting to rise. The bond market is starting to see that there's something wrong here. So it's a whole combination of things that are happening that would be the perfect recipe for leading to a bear market in
yeah,
stocks.
yeah,
You know, but here's the thing about that though. This to me, I'm not afraid of this at all. Uh, in my view, millionaires and billionaires are born out of bear markets.
Yeah, exactly.
Um, if the mother of a successful investment career is temperament, right? And this is what Warren Buffett says like all the time. If you listen to his interviews, people ask him like, "How do you do it?" And he's like, "I'm not a very smart person. I'm just a very temperamental person.
Yeah,
I have the temperament to be able to live through these types of incidents
yeah,
and be able to have a fixed mind as to what the long-term future holds,
yeah,
right?
exactly.
So if temperament is the mother of a successful investment career, I think bear markets are the father. Where fathers are usually stricter and colder than mothers are, and bear markets are not very nice, to people, because we can see like my position in Beyond Meat is down 50% from my cost basis,
Yeah,
slightly
same here.
more now.
Yeah, same here.
Um, so temperament is one thing, but then what you do during a bear market is what sets the stage for the next 10 years of growth.
Yeah, exactly. So historically, normally when bear markets really start crushing down most companies, and if it's a good companies that actually has a great product and a future, even though they're down like 50, 60, sometimes 70%, that we see in some of our stocks, historically, normally when things gradual out and it becomes better, we tend to see them going way beyond where they were before they started crashing. So,
Yeah,
which gives us a perfect opportunity to dollar cost average.
exactly,
Yeah.
exactly, and that's exactly what I'm going to start doing.
Mm.
There's one thing that I use as a tool to when to start allocating into a company that I already like for the long term. And this is a simple thing you can build using just freely available data that you can get from Yahoo Finance or something.
Mm.
But basically, you can download historical, prices, daily price or weekly price. Daily is preferred. And then you can use Excel formulas to basically calculate the percent that we are off from the all-time high,
Mm.
and look at the chart of that. So it's a chart that will have on the y-axis, at the very top will be 0%, and then it's just everything below that.
Do you
So
have
whenever the stock is at
something?
an all-time high,
Do you have something you could show on the screen, or maybe you don't have it?
I do. I just don't have. I'm actually on my phone.
Okay, no worries. We could take it the next time. Otherwise,
Yeah, yeah. So it's basically what I like to talk about is the max drawdown. So it's a chart that instead of looking at the stock price, you can see the percent from the all-time high that it has come back.
yeah.
And on that chart, the reason why it's so good is because you can actually visually see. It'll give you context as to what prior drawdowns have been like. You know, and that will tell you where the market typically likes to take the stock back to before it ultimately stabilizes and recovers again.
Right.
It's not a perfect system, but it is a system that I think works more often than not in the long run.
Yeah.
And it's what I've personally used as my own investment guide as to when to buy more in companies. And it presents a very strong risk management discipline because you're not always chasing on the upside then. You're
Maybe
waiting for these opportunities, which inevitably come every 1 to 2 years anyway.
so. Maybe that's a separate video we could do one of these Fridays,
Yeah,
talking about that because I think that's something the subscribers would actually enjoy.
yeah, yeah.
Mm.
I'd love to show
Yeah,
that. Yeah,
definitely, definitely. So, but then, so when we're thinking about, I mean, short term and long term, and I'm guessing, like we said, wrote in the thumbnail here, like between $50 to $150 in stock prediction. So, in the short term, I mean, this is just obviously speculation, but where could you see the price go when it comes to the stock price here and beyond?
yeah, yeah. It's hard to know. It really looks like this $50 level is just a rock solid base for the company. Because it's returned there twice before since IPO.
Yeah,
and has never broken down below that. Even during the COVID crash, when everyone was panic selling, um, it never broke down below that.
No.
So, I think 50 is interesting. And by the way, $50 is back then was a much higher multiple than $50 is today.
Yeah.
Because the last time we got to 50 was way back in, during the, for example, the COVID drop. But back then, revenues were, almost, 30% lower than
Yeah.
where they are today.
Yeah. That's a really
So if
important
we
point
get
to
back to
actually
that
think
same
about.
level, yeah.
Mm.
So just simply getting back to that same level of $50 a share on 30% higher revenues means that, the multiple is significantly less than where it was at that time.
Yeah.
So I think that's.
What is it trading at now? Around 8-9 PS, right?
On a price to sales ratio, it is. I can check it right now. Let's see. Over the last 4 quarters, we're at about $466 million in revenue, and we're at roughly 4.1 billion. So that's about a price to sales of a little less than 10.
Okay.
I want to say
Mm.
a little less than 10. Yeah.
Wow.
So that's again high,
Mm.
right? If you look at it on historical standards, not on Beyond Meat's history, but stocks in general over say the last 20 years, multiples are never usually more than 4 times, maybe 5 times.
Yeah.
So there is a bear scenario out there where the stock could drop another 50% from here. So we're looking at maybe $30 to $40 a share. But I think that would be I think that would be the time to begin buying it then even more.
Yeah.
I think now is a good time to start dollar cost averaging. Again, not investment advice,
Yep.
not a recommendation. This is just simply what I'm doing personally.
Yeah.
Is I'm adding here. I'll be adding more at 50, and if it does get to that point, I'll add more at 40 and 30.
Yep.
But I think what's ultimately important is the long-term vision of where we're going.
Yeah.
Right, what the stock does in the short run has no effect on what the company will eventually be able to do in the long run.
Yeah.
And I still have a very high conviction that Beyond Meat will be doing 20 billion in revenue.
Yeah.
By the end of the decade, right? By 2030.
And when a
So if they do
multiple
20
of
billion
3
in revenue,
and a multiple of
yeah.
3 and 4, yeah, that would be extremely high valuation then on a stock price, especially.
Yeah.
Yeah.
Yeah. Exactly.
Yeah.
Yep. And even on sort of a 5-year basis, sometimes 10 years out is way too long for people to think about. But even by 2026, I've run a couple of different scenarios in my ROIC model.
Yeah.
And I think I actually pinned it on my Twitter handle. So I have my full portfolio of 18 companies that I have, and I posted exactly what I think the target ROIC is going to be by 2026. And
Yep.
for Beyond Meat, I have it at 10%.
Yep. I'm showing it
which
here.
is reasonable, which
Yeah.
is a very moderate ROIC.
Yeah.
By 2026. And if they continue to deploy capital at a 20% rate, which is again the investments they're making in R&D centers, in factories, in Shanghai, and in Europe, in the Netherlands, if they continue to just invest in themselves, grow their investment, grow their capital base by 20% a year, earn 10% on that capital by 2026, and if they have a 40 multiple to cash flow, then I think Beyond Meat will be roughly a 14 billion market cap by 2026. So, relative to the size of the company today, that's, more than a 3x
Yeah.
from where we're at today in 5 years.
Yeah.
So that's a very attractive return. I mean,
Yeah.
if you look at it relative to the market, a three bagger in 5 years is a very strong return.
Yeah, and actually, the
Yeah.
good thing is that I've talked about this on the channel before. We're having a baby now in April,
Oh, congrats.
thank you, thank you.
Very.
Uh,
Is this your first?
that's my first biologically. Yeah, it's my first. I have a
Wow.
18-year-old stepson, Marcel.
Oh, okay.
So and now he's going to get a baby sister. Uh,
Yeah.
and that means obviously realistically that our financials are going to be very different for a year after that. Here in Sweden, it's different to many countries. So the parent usually can be home about a year. It could be 1.5 year, depending how, and you actually get about 80% of your pay, but it's depending on how you count it. So normally it's like 50, 60%, which is pretty good when you think about it. But that means also that our our pay is going to be very different, and it's going to be hard to invest during that year. So personally, for selfish reasons, I mean, I wouldn't be that negative to the idea that I'll keep Beyond Meat at a lower price for a longer time so I can eventually invest slowly. And
Yeah.
I think that's usually how you build your wealth anyhow, because you don't want to see a company just fly off too fast, too quickly, right? You want to be able to, if you really believe in a company, like I think you and I do, and we see the 10-year vision here, then, and even longer, actually. There was an article just, I think was today or yesterday, where basically stated that in 2040, some research expect that plant-based meat could be 60% of the overall meat market.
Yeah.
So imagine a percentage from Beyond Meat there being the industry leader. That could be perfect timing now to actually go in this stock. Not financial advice again,
Yes.
but still, yeah.
Yeah. Exactly. I think it's definitely there. So
Yes.
I think what's going to happen is like since everything is getting sold off dramatically, um, stocks are moving to a correlation of 1.0. Basically, everything is just going down together.
Yeah.
What will I think ultimately serve as the point at which there starts to become some separation between real growth and companies that were fluff all along
Mm.
is going to be when Q4 earnings come out. And it's one of the reasons why I think investors are selling off on Beyond Meat is because if you look at a chart, for example, of revenue or even gross profit, that growth has slowed,
Mm.
right? It's definitely slowed.
Definitely.
We got, Q3 was just really, really bad for Beyond Meat, right? I think it was just a combination of multiple things where nothing in the pipeline really clicked during Q3. So it was just this vacuum where nothing happened of interest during Q3.
Yeah.
And so that's really hitting their growth rate,
Yeah.
their numbers. So most investors are focused on trailing numbers. Some of them are focused on current estimates, but analysts are not going to be revising upward until they see evidence that these deals that Beyond Meat is striking with, say, Pepsi and McDonald's is actually leading to real growth, at the gross profit level.
Yeah. Exactly.
So, because I think like McPlant is going to do really well. Um, the orange chicken at Panda is going to do really well. The KFC is going to do really well. The chicken, the Beyond Chicken, but we still don't know any details about the financial arrangement between these restaurants and Beyond Meat.
Yeah.
So we don't know what the revenue split is going to be
The
and
margins.
the margins, right?
Exactly.
So we'll find out in Q1. So we may have to wait until April or May when they do report Q1 numbers to really see that.
Yeah.
But maybe there's some commentary that they give on the Q4 call that helps us understand that, or maybe they give some guidance on revenue
Exactly.
for 2022, and that could help stabilize the stock.
And we have to remember, like we've talked about many times on this channel, you have mentioned it several times, whatever is going on, when it comes to this stock being shorted, I mean, right now it says, I'm not sure how updated Seeking Alpha is here, but it says 35.55% short. So, and it was just recently, a week ago or 2 weeks ago, it was like the number one in the Russell 1000, right? Number one
Yes.
shorted stock, and around the fourth in all of the stocks in the U.S., which is, what is it, like 7 or 8,000 stocks in total?
Yeah.
Yeah. So
Yeah.
that's insane, right?
Yeah. It's absolutely incredible.
Mm.
So they're betting on this being a fad that's going to basically die down. Some people think it's a zero because they think that they will never be able to achieve profitability. So we will see, but I don't think that's going to happen though. I
Right.
don't think that's yeah. I don't think that's the outcome of this.
No, we probably wouldn't be sitting here now. Like, so no, definitely, and I keep hoping or believing strongly, like Kathy Wood kept talking about in a few videos, that she didn't agree with Elon when it comes to Tesla, that he doesn't like the shorts, because for her as an investor, anyways, and for us as an investors, you want to, it could be a blessing in disguise if you're a long-term investor, especially, right?
Yeah.
Because you'll get these amazing prices, especially if you're thinking like you're talking about, right? 14 billion and then 20 billion in revenue, right?
Mhm.
So we're talking about more than a 10x stock, 12x stocks from where we're at now in the next 10 years. So if we
Mhm.
go into these prices, it's enough. Like we're talking about here in the thumbnail, if it'll go up to $150 to $180 in a couple of years. If it does that, already you have your potential of making money, right? Uh,
Yes.
so this is actually a perfect opportunity. That doesn't mean that I don't understand people feeling bad, that is going down now. And then we have to respect that. But people have a different goals. Maybe there's someone who has to take out money in a half year from now or something, and they invested half of their savings or all of their savings at the 150. So that really sucks. But
Yeah.
but otherwise, from a long-term perspective, this is actually a great opportunity.
Yeah.
Hmm.
Yeah. Exactly. And keep in mind, with regards to the last point I want to make is the operating expenses of Beyond Meat are actually not rising that rapidly. So if you look at it on a quarterly basis, SG&A plus R&D is only increasing by about $10 million per quarter. Over the last several quarters, this has been the case.
Yeah,
Sometimes it's been even less than that.
yeah,
So the growth rate of overhead expenses is not very high. So all they would need to do is, if, and since all three of these deals are kind of working simultaneously between KFC, McDonald's, and Pepsi,
yeah, and then Yum
and even
Brands.
Panda Express,
Mm,
yeah.
mm,
If they hit off a couple of quarters where revenue accelerates, beyond that $10 million increment
yeah,
in a single quarter, which should be very easy for them to do,
yeah.
very easy for them to do, then suddenly you're going to wake up one day where we get the earnings result and they're profitable at the operating income level.
Yeah, we see the scale actually shifting there, right? And we see the margins really coming much higher, because well, what are we hoping for? Like, because they used to be around 30% in gross margin, right? They were down to 21, 22 in Q3, but temporary.
Yeah.
But
Yeah, I think that Q3 number is really screwing up the analysis because I
mm,
think it's an outlier.
mm,
Um, and I think we should see a recovery in that in Q4 a little bit, and that should help, with controlling the cash burn for the quarter. But again, I think it's going to boil down to what happens with Q1 numbers. That's going to be what everyone is going to be interested in,
yeah,
is seeing how Q1 shapes out now that we have all these deals happening now.
yeah,
You know,
definitely. All right. So yeah. this was the first video of hopefully many. I think me and Mayur have made a 10-year contract of meeting here 52 times a year.
Yeah. Yeah.
So no, but we'll be continuing with this for now, guys, every week and probably every Friday at the same time, trying to be consistent with that. Depending on Mayur's schedule, of course, we might have to reschedule, but otherwise, yeah, we'll keep doing this. And guys, come up with new ideas for themes around Beyond Meat. We talked about that. We might look at Oatly a bit more. Maybe we'll look at others. We'll compare them. So, but definitely we have a lot in the pipeline. So, guys, thank you guys for joining us, and thank you, Mayur. And I will see you next Friday then.
Awesome. Sounds
All right.
good.
Thanks.
Happy to be here. Yep.
Peace.
Bye.